Good afternoon. I'm Cameron Moore, Executive Officer here with the Wilmington-Cape Home Builders Association. Appreciate you joining us. Today we're talking a little bit about renovation finance. And with us today we've got Mark Vernon from Guarantee Rate. Mark, appreciate you coming and just giving us a great overview. We've had some conversations, but let's quickly just kind of dive into this. Renovation specialist, that's what you do. And the financing portion of that. What does that mean? How do you get started with that?
The renovation financing is a facet of the industry that it's parallel to construction financing.
Okay.
People are either able to buy or refinance a home and have the funds set aside as part of the loan to make either needed or desired renovations or improvements to a property.
Okay.
It's all put into one 30-year fixed. In construction lending, you may have a two-time close. This is just one loan.
Okay.
Where you go to closing, let's say on a purchase, buyer would go to closing, they own the property, and then their contractors would come in and make whatever improvements such as door repairs they would like to make, but the financing is permanent financing.
Okay. So it's really just, I mean, you talked about 30-year, the financing element. From a time frame, from product wise, it's really just like any other financing on a mortgage.
Correct. Okay. Absolutely. It's obviously there's some more steps to it. You've got to line your contractors up, just like new construction. That's the definite parallel. The difference is the structure is already in place.
Gotcha.
With a renovation loan. It's not for new construction.
Okay.
But you can almost take a house all the way down to the foundation with the programs, but it's for a house that has been in place.
Okay.
And depending upon the program, either it has to have been in place for a year or there has to be a CO issued on the property, one or the other. But some of those guidelines are loosening up a little bit.
Sure. A little bit about the programs. You mentioned a couple different programs where we got started today. And there's quite a few out there, but you highlighted, I believe, 3 in our conversation earlier. Touch on those a little bit.
Yeah. Well, there's the Fannie Mae, which is called the Home Style, and HUD, which puts out the FHA loan program. Really are the 2 big ones. There are some other little takeoffs from those, the escrow holdbacks and whatnot, but we won't really go into those right now. But on the FHA, which is, everybody's, not everybody, most people are familiar with an FHA loan, which is owner-occupied, minimal down payment, 3.5%. The difference being on these programs is we would take the cost of the repairs and or renovations, add it to the purchase price, and the down payment is based off of those numbers added together, what I term the adjusted acquisition.
Okay.
So the FHA program is excellent for first-time home buyers or move-up buyers or people where the equity is just going to be a little bit tight in the property, or even if they're a little credit impaired as well. Okay. The conventional program, which is the Fannie Mae, is fantastic for the move-up buyer who's got a little bit of equity, where they can put a little bit more money down, although the minimum down payment for owner-occupied is 5%, but it can be used on second home and investment properties as well.
Okay.
So it's very popular among investors that are going to hold property, to rent it out, be able to buy a deprecated property, or one that just needs to be upfitted, and put it all into structured financing.
Sure. Those are great products, and that's certainly a wonderful lot, because you're hitting kind of in the construction market, in the real estate market, everything on every gamut. You're hitting both sides. You're hitting kind of a little bit of that news. Somebody that just came in and bought a house, and then they've gone through that process, and now they're looking and say, we'd like to do a little bit more upgrading of that house. Get into essentially their unique needs, fit and finish of the house. And then at the same time, we talked a little bit about foreclosure, where somebody's coming from the investment side, bought something, walked into it, and said, okay, this is what we have to do to get to a sellable product. You talked a little bit about terms, rates. What are some of the rates that you see? Is it comparable to essentially if you were just buying a new home or a second, coming in and buying a house for sale? Yeah,
they're similar. With it being a construction type of program, the rate's going to be indexed up a little bit. Usually it's about a half a point above prevailing, whether it's FHA or the conventional. Because there's a lot more involved, and on the servicing side, there's a lot more work involved. So, we need a little bit more of a margin when it comes to the terms. But the beauty is that, of course, you're rolling all of the financing, which is for the purchase and for all the construction costs, all into one loan instead of having a home equity or a personal loan.
Cover different, a first, a second, and
or cash out of pocket situation. So it's a trade-off in there. Fees really depend upon the fees are about the exact same as a regular mortgage, but then depending upon the size of the build, there are certainly going to be some additional fees, but they can either be just a little bit or it can really start to add up, depending upon, again, if it's a big build, then, there's a lot more involved on, after they close, a lot more inspections, that have to be provisioned for, stuff along that line.
Okay. Well, that's a great product overview. We really do appreciate you coming by the office today, explaining this, because that's one of the things out of the HBA, what we're doing, and the great thing about our members is trying to get this out to the consumers, to the real estate community. Talk a little bit about the realtors and your connection with them, because we want both sides. I mean, you have consumers that come to you, and then at the same time, you're working with realtors and having them to understand this product as well. So we really do appreciate you coming out today and being here and sharing this with us. Thank you.
Cameron, thank you very much for inviting me, and hopefully some insight's been given to some alternative financing for your members.
Appreciate it. Thank you.
Thank you.
Thank you.